All right, moving on. That was about the markets, and now let's talk about the macro picture. Now, Iran's currency that has staged a sharp rebound against the Pakistani rupee this week. Reports suggest that it reflects shifting expectations around the ongoing conflict in West Asia. In Pakistan's open market, the Iranian Rial surged fourfold against the Pakistani rupee and has reversed the steep losses it faced at the start of the war. Now, at first, the surge appears to be driven largely by sentiment rather than structural economics. Growing expectations of an end to the war are raising bets that sanctions on Iran could eventually be eased. It has encouraged traders and investors to re-enter the real market. This has also led to a spike in demand and pushed the currency significantly higher against the rupee. Another major factor behind the rial's recovery is the rise in global oil prices. As tensions in the region intensify, crude prices have climbed sharply, and that benefits oil exporting countries like Iran. Higher oil revenues tend to improve a country's external position and currency outlook. Even if broader economic restrictions remain in place, reports of increased Iranian oil exports in the recent weeks, they have further reinforced this trend. The appreciation of the rial is also being fueled by speculative activity. During periods of uncertainty, currency markets often see sharp movements driven by short-term bets on future political and economic outcomes. In this case, optimism about post-war recovery and potential reintegration into global markets has created a wave of buying interest. However, the situation remains highly volatile. The trajectory of the rial will depend heavily on how the conflict evolves. Experts say that any setback or escalation in hostilities could quickly reverse recent gains.